Hello everyone. This is Abhilash Kaduthanum. I head the payment solutions for TCS North America. So payments forms one of the fundamental tenets of transaction banking. Banks and financial institutions have been at the forefront of money movement. While we in the banking world think of payments as high value payments and low value and real time and batch and cross border and all the rails that processes them, in reality, the end customer seldom thinks of payments that way. They think of wellness, they think of fashion, they think of holidays, they think of the ways in which you're making the payment and the ecosystem rather than the actual means of payments itself. The digital consumption patterns of the customers have been changing, and they have changed drastically, and there is a general movement towards a purpose-centric ecosystem in which the fundamental shift from who is acquiring the transaction to who is managing the end customer experience. So this is forcing the landscape to evolve very fast, and the value chain of payments is getting intertwined with numerous entities becoming part of the payment initiation, payment fulfillment, and also the payment experience. So when we talk about embedded payments, we are fundamentally talking about how we need to transition from thinking about payment instruments to payment outcomes. So the recent proliferation of digital modes of payments that is accelerated by the pandemic have contributed to numerous innovations. So the elevation of company worlds like Venmo and Vips to a work form speaks volumes of the influence of the new age entities that have been able to make the payments, and they have become embedded as part of our life experiences themselves. So the current pandemic situation has, of course, accelerated the development of payment ecosystems into a much more touchless and cashless society. It has also accelerated the need for relying on digital proximity over physical proximity in every walk of life. So payments is becoming embedded into the customer journeys, blending into our customer lifestyles, and thereby rendered invisible. Akin to our consumption experiences in other industries like retail, there is an increased expectation that value and money be transferred instantly with multiple choices available to the customer. Consumer decisions are also driven increasingly by real-time data and peer opinion. Businesses see a faster and more secure payment finality of settlement as key for liquidity and risk management. And also, it defines many of the models that we are working on. While all the payments are fundamentally about moving money, the context is not the same. Each of these touch points of payments with other industry verticals, such as entertainment or healthcare or hospitality and the retail, they necessitate that the payment itself is embedded into the experience workflow and not just stand out as a distinct activity. Hence, the experience journeys for each of these industries is different, and there's a need to curate the specifics of the payment journeys in those particular verticals too. So as physical proximity has, of course, reduced, consumer and corporate expectations on transparency has also gone up considerably. So while payment services are most certainly going to be digital in future, the future of money itself is envisaged to be digital, and the cashless societies are no longer the realm of fiction. So as digitization becomes a reality in all spheres of our life, interconnectedness of industries has increased towards a purpose-driven ecosystem, thereby blurring the industry lines. While payments has remained the stronghold of banks and financial institutions, it's now common to see a lot of financial services and payments being provided by part of the retail shopping experiences as like Targets or CVSs of the world, or the payment wallets and instruments being provided by the airlines and hospitality chains like Hilton and Marriott's and Airbnbs of the world. So, but many of the governments are also encouraging this shift by providing low barriers of entry to non-financial institutions in this sector, and for certain payment types and prepaid functions to encourage innovation. So corporate and commercial payments, which had been kind of left out compared to the retail segment with respect to the payment experience and innovation, has also had an exceptionally good run. So things like trade finance and AP automation or buyer-initiated payment and supplier financing and procure-to-pay, all of these have got a good facelift, and the newer services, sometimes integrated, are also getting rolled out. So as TCS, we think of the paradigm as the Internet of Payments, exactly what Internet has done to the content. So today, when we consume any content online, be it on our mobile or TV or laptops. So we don't think of what routers or switches or security devices or ISPs are involved in delivering this streaming content. We just consume the content and we are focused on the real outcomes of it. And the rest of everything is embedded into this particular process. Similarly, while we look at consumer behavior that is trending towards an instrument agnostic commerce, we observe that there's a unification of payment processes and infrastructure that brings in the various value stores for handling in unison. So current payment systems don't fully capture the context of the payment. So the payment and the business data sometimes travel separately, and they are traveling separately between the buyer and the seller. So with ISO 20022, there's an opportunity for the payment and the business context to actually be traveling together for the first time for us to understand the real intent of the transaction. So the insights that can be derived from the extended and structured and contextual data that can be powering the new payment types, the new payment flows, and also the new business models themselves. So with an increased number of players in the payment ecosystem comes the increased complexity of creating interoperable systems, platforms, and processes. So hence the building blocks are not just the payment rails. So it's not just the payment rails across 2022, but also a lot of the overlays and the market infrastructure and the utilities like registries, proxy resolution solutions, some interoperability solutions, and above all, digital identity and trust. So when we look at some of the countries that have kind of had a good adoption rate of real-time payments and newer age payments, what we see common among these countries is that they have established a first generation real-time payment system with significant regulatory support, and the ones that have made some significant investments into building the overall consumption ecosystems too, not just the real-time payment rails. It's the other way around too. So hence, most of the countries that we are focused on and building on the alternate rails for moving faster money, unless they combine it with the other capabilities to make the payments much more simpler, faster, and safer, it just becomes another choice for the end consumer. Unless this proposition is significantly better than the existing ones, it just becomes an adoption issue, and sometimes it is just marginal and they just get another new rail to play with. So we believe that the card rails have done a good job and establishing a network where all the players in the ecosystem benefit, and there is a motivation for the merchants and for the end consumer. They're habituated and they know exactly what to expect. So for the consumer, it has to be simplicity, consistency of acceptance, and also based on the foundation of trust and confidence, things like dispute and returns and rejects, and all kinds of solutions that come along with a card network solution. So in India, when you look at it, we all know the success of the UPI, and it has been doing over 4 billion transactions a month. But if we decode what lies beneath, and it is actually the conscious effort to create the overall digital stack at a country scale, along with the payments as one of the pillars. So the focus is to solve the problem of each of these pillars. So the presence-less layer along with the consent layer will drive digital identification, privacy, and also security. So the paperless is all about the digitization efforts that has gone into DigiLocker and things of that nature. And there is a cashless layer that is forming with respect to the foundations of the money movement itself. So when we look at the success of some countries like India in the digital payments, it's not just the rails, it's all the other consumption ecosystems and the other pillars that also worked along with to make it a success. The other act of human nature is also to center our lifestyles around fulfilling and rewarding ecosystems. It makes it much more evident in customer behavior that the expectation of the payments is to blend into the dominant ecosystem, whichever is the dominant ecosystem that we're talking about, and that has become much more important. So it's become extremely difficult for some of the enterprises to get the attention of the customers, and most importantly, to keep the existing customers engaged and build a long-standing relationship. So super apps is another concept that is now taking off. And super apps address this issue to a large extent by offering a wide variety of services to the customers under a single umbrella with focused attention to convenience, simplicity, and sometimes rewards, and also superlative customer experience. So WeChat, along with Asian giants like Alipay and Gojek and Grab and others, they all pioneered some of the super app development, and soon it is getting some global traction. Currently, there are several brands that are offering super apps, albeit in different stages of development. So Tata Group itself has come up with its own super app. It's called Tata New. So at the heart of every super app strategy is a compelling value proposition for the end consumer. The value proposition should be built at the core of what the strength of the company itself is and what the niche that you're trying to address. So for example, many of the super apps started with offering a chat as a service and payment service to begin with. But then we are building a lot of services around them. So forging partnerships is much more important in this particular stage. So you have to forge partnership with some of the critical aspects, and then you have to get some partners who are able to bring in that service that you yourself cannot build within the ecosystem. So payments and loyalty are two key aspects that need due considerations when you look at weaving such a super app strategy too. So super apps usually embody multiple facets of the successful business model. So their platform economy, online marketplace, so exponential value generation, subscription economy, to name a few. So even though the adoption of super app is still in the nascent stages in the Western economy, we believe that the massive proliferation of super apps is going to be just around the corner. So enterprises who make the first move advantage will have a lot of good things for their benefits. And of course, there has to be a compelling value proposition that goes behind it. And all the enterprises that has a network, they will have a good superior vantage position too. So when we look at how the future of payments itself is evolving, the rhythm of technology is definitely changing the rhythm of business. And we are all seeing its effect felt on payments. So payments has increasingly become a technology play with the adoption of biometric authentication, invisible payments, cryptocurrency adoption, and always on, always available data services on the cloud. So artificial intelligence and machine algorithms for payment fraud and risk. So all of these are the technology relationships that payments has with it. Now, development of some of these payment functionality and the API microservices architecture that is readily deployable on the cloud and accessible from any geography, but still available locally, it also plays a big role in the data localization kind of regulations. Least cost routing of the payments based on multiple dimensions of contract, the scale, the pricing, the efficiency, and the speed and the economics behind it will also form a central pillar of the future generation of payments architecture. So while blockchain and cryptocurrency can be seen as new kids on the block for payments, they have already demonstrated their usefulness in security and trust and transparency and automated auditing, things like that. So as the next generation of IoT revolution kicks in, the number of payment originating entities is going to be exponentially higher, and we will eventually surpass the human originated payments. So stress caused by the micropayments on traditional payment networks will have to be balanced with the cost of processing. So dynamic pricing becomes much more important in that regard. The amount of payment data that gets generated due to the machine context will no doubt be very useful in providing newer services and newer analytics and things of that nature, but it also adds a lot of challenges to the risk and fraud models that are currently in place. So moving to cashless society by various countries is based on multiple dimensions of sustainability is one of them. Fundamental thought process is that how do we leverage the decentralized solutions that we all are familiar with to make a payment system as simple as cash and without using expensive algorithms. So when we think about sustainable futures for payments, we need to really think about how we take advantage of IoT and the emerging 5G technologies and maybe even some futuristic things like the quantum computation to solve identity problems. So we should use this opportunity to construct the modern payment solutions where we rely on intelligent consumption ecosystems, where sustainability is at the heart of what is being done. So while playbooks are really rare for such multifaceted challenges of the future of payments, there are certain imperatives that the payment providers should be looking at that could be relevant for them to continue thriving in the same market. So continuing to invest in ecosystems and gradually transforming themselves into an ecosystem player, embracing all the marketplace philosophies, enhancing the core, but distributing the intelligence towards the edges, and fostering how the efforts to create interoperable systems, some through machine learning, some through machine-first models, but above all, how do you keep it as a purpose-centric solution and continuing to be the custodians of trust? So some of these are the imperatives that we within TCS think are very necessary for the next generation of payments. And they form the foundations of some of our future of payments and the Internet of Payments, as we call it. Thank you so much.